Ladies and gentlemen, welcome back to the channel. Today is a green day in the markets, but you are still seeing somewhat of a risk-off stance. You are seeing the Dow Jones Industrial Average that is up much more than the NASDAQ. And I want to go over why the markets are actually up today, because there's one key thing that is really driving the markets higher, but we don't have any of the major data, none of the major catalysts that actually happened today. So today was really like the chill out day. And I think this could be just a continuation of shorts covering as well in certain key indexes, certain key stocks that do control the broad markets. But as you guys can see, the Dow Jones Industrial Average is up 2.10% today, a big move to the upside for them. The NASDAQ up 1.51%. So what you really wanted to see for the day was the NASDAQ up more than the Dow, because there is two things that are going to happen here. The NASDAQ, as of yesterday, was down 28%. Right now, it's still down like 26.5%. Dow Jones Industrial Average as of yesterday was down 14%, so it's still down 12%. Now, one of two things is going to happen. Either the Dow Jones and S&P are going to come down and they're going to match the NASDAQ down, let's just call it 25%. They're going to fall, say 20%. Usually there's a 3 to 5% difference between the Dow and the NASDAQ, not double. Usually the NASDAQ is not down double what the Dow and S&P are down. So that's one scenario. Just other stocks come down. NASDAQ kind of holds its own going ahead into the future. Or what happens is the NASDAQ actually comes up to more so match the Dow and S&P, call it down 15%. So you're either looking at continued pain in the Dow and S&P and less pain in the NASDAQ, or you're going to be looking at more essentially less pain in the NASDAQ and a rally in the NASDAQ. So I don't know which one of those is going to happen. I don't know how fast it's going to happen, but you don't tend to see the Dow down half the amount as the NASDAQ. That typically does not happen for an extended period of time. Now, what is actually affecting the markets today, and what is causing this rally to the upside, basically across the board here? JP Morgan shares pop after bank says it will reach key returns targets earlier than planned. Key points. The lender said that a 17% return on tangible common equity remains our target and may be achieved in 2022, according to a presentation. That's a switch from earlier this year when CFO Jeremy Barnum warned that headwinds, including rising costs, would cause the bank to miss its target for the next 1 to 2 years. JP Morgan shares rose 7.5%. And, banks and certain industries related to banks, they do widely control the Dow Jones Industrial Average. So it's not a shocker that the Dow is up 2% today. And this is good, because what is very important to the economy? What do people pay attention to arguably the most if you're thinking about a potential recession, bad economic, slowdown, or whatever the case is? Well, you look to the banks. How are the banks doing? What happened during 2008? Well, the banks did not do so hot, and the markets were down 4 years before they actually hit new all-time highs. So the fact that the banks are coming out and saying, hey, situation's looking a little bit better than we thought it was going to, that is a good thing, and that is a reason for a slight market bounce. But in the grand scope of things, we are still down dramatically from our all-time highs. Still, like I said, NASDAQ down over 26% from its all-time highs. There's a lot of room for a bounce in this upcoming week, or potentially a big move to the downside. And if we take a look what we have ahead for us coming tomorrow, we do have some important data points. Monday, today, we really didn't have anything. We have Fed Bostic. He did speak, and he said some kind of dovish things. He was essentially saying that maybe they could go more aggressively now on rates and then start to chill out and not raise as aggressively in September. And that kind of sent the markets up a little bit, but it wasn't that hard reaction that we usually get from Fed speakers. Now, tomorrow you do have new home sales, S&P Global Services PMI, and you do also have Fed Chair Powell that speaks at about noon. So that's going to be very important. Markets are going to react to that. And like I've said over the last 2 videos now, I think if the Fed is more aggressive, the markets might actually like that, because you'll get inflation under control. They won't have to raise rates as long. Yes, it will hurt a lot quicker, but it won't last as long. Right? If the Fed came out and essentially gave us a 1% rate hike or something like that, you're going to crush inflation pretty damn fast, and it's not going to take years to essentially get inflation down. And hopefully we could start to buy long duration growth, a lot of stocks in our portfolios, and you could see a substantial bounce in the subsequent following days and weeks after that 1% hike. But I would expect short-term pain if the Fed does rug pull us like that. I think possibly that day, if they do rug pull us, Fed Bostic said today he's open to more aggressive rate hikes than 0.5%. So that does imply to some degree a rug pull. Then you'd probably get a negative reaction that day, maybe the next following days, but I think the overall digestion would be positive. Kind of like the last Fed meeting where Fed Powell, the report came out, press conference at 2:30. The markets had initially dropped like 1%, and then we ended up rallying and closing the day on the S&P up about 3%. Whereas the next day, the NASDAQ was down almost 6% because people digested it and they said, hey, this is not good. It doesn't look like they're fighting inflation. Fed Powell took off 50 basis points rate hike off the table. That is not good. Let's sell stocks. That was the overall mindset. And I think you could expect somewhat of the opposite of that. If, we do get rug pulled, I would imagine the markets would fall 2 to 3% after those words came out based off of algos, and then possibly the next day could be a major rally. And that could happen based off of Fed Jerome Powell tomorrow. That could happen based off of the FOMC minutes later this week. And the minutes do come out on Wednesday, and that's going to be the most important catalyst of this week, as well as Fed Jerome Powell tomorrow. And that will come out at about 2 p.m. Eastern Standard Time. For the FOMC minutes, basically a transcript of what was said at the last Fed meeting and give us more clarity to kind of what to expect over the next couple of weeks as far as raising rates, so on and so forth. So those are going to be the main important keys. We'll talk about this more in depth, especially as we do get more analyst commentary on this, kind of what the markets are expecting. We will talk about it more, but that's basically what you guys need to know for right now. Now let's talk about AMC stock. And like I said, you're seeing somewhat of a risk-off stance today. You're not really seeing investors flooding into a lot of riskier assets. AMC is down about 3%, so it's not like a bad day necessarily, but it's not like a great day at the same time. Now, the interesting flow sentiment, and this is very interesting, no pun intended, 5 orders totaling $519.52 thousand, positive order value of 88%. Lots of call activity that is coming through for that June 17th expiration as well as May 27th, so by the end of this week. Lots of calls that are going through, and you guys can see the positive order value today, 88%. Over the past week, it's been 89%. 103 orders totaling $32.57 million. The short interest is sitting at a high at 22.39%. Current short interest shares that are sold short of 115.4 million, cost bar max of 4.38%, utilization of 100%, and the days to cover sitting at 3.23. So you're primed for a short squeeze, no other way to put it. And I think this executive order will start to play a bigger impact than not to where we trade over the next couple of weeks heading into June 2nd, June 3rd, when the executive order does go into effect. I think that's when you can expect to see a pretty parabolic rally, and I have no reason to think otherwise. The last 2 times this executive order went into effect were the tops of the rallies in January and in June. Now, shares out on loan is still much higher than the actual shares that are sold short, currently sitting at 159.81. We only have 115 million shares sold short. So in that context, there is a lot of shares that could potentially be used against us. So keep that on your radar if we do start to see the short interest going up in a big way. It's because all of the shares out on loan. Now, as far as the option activity for this upcoming week, you're looking at about 95,000 calls that are out of the money, about 4,000 calls that are in the money. The ratio here, very, very bad. We have a lot more calls out the money, so you could potentially see a lot more buying power on the open markets by the market makers if the stock does continue to trend to the upside, which I do think it will. over this week, I think overall will be positive. I think next week will be very important as well for AMC stock. Now, for the puts that are in the money, you're looking at about 18,000 puts that are in the money. Out the money puts at about 34,000. So still a decent amount of puts that are in the money. If they do run out of the money, that could be most certainly a lot of buying power as well that does have to happen by the market makers, especially if people really start to pile into these weekly options, which they tend to do that, especially when the stock does make big moves. That could be very, very important. For June 17th, that's going to be the important expiration. You're looking at 2,300 calls that are in the money, 201,000 calls that are out of the money. So it goes without saying there is a lot of potential buying power for June 17th. And I think this is going to be a massive expiration once it comes down to June 17th. You are looking at about 103,000 calls or puts that are in the money, 45,000 puts that are out of the money. So even on the put side, lots of buying power potentially that could head onto the markets. So that is pretty much going to be it. That is what you guys need to know specifically on AMC stock. We'll go over the technicals later at the during after hours, whatever you want to call it, when the markets are closed. But you really want to watch that key level at $10 per share. That's going to be a very, very important level, but we still do have a healthy uptrend from $9.70 per share when we did hit that low, and I really don't expect us to break down lower, but I kind of want to go over what I expect throughout the rest of this week in a little bit more detail for you guys related to the context of all of these catalysts, because I think that will be the thing that really does drive the markets for this week. So that is basically going to be all. Stay tuned for the video that comes out after the bell. That's going to be a very important one as well, and hopefully provide you guys more context on why I think this week will be bullish for AMC stock. So hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. If you guys want to come trade it with me live in real time, link down below in the pinned comment. Thank you for watching, and I will see you in the next one.